You wake up one morning, and something feels off. The money in your account is still there. Your job still exists. The streets look the same. But quietly, everything has already changed. Prices start rising. News becomes confusing. People begin to whisper. Not panic, not yet. Just uncertainty. Because an economic crisis doesn't begin with chaos. It begins with doubt. And the dangerous part is, most people don't notice it when it starts. At first, nothing looks dramatic. There's no explosion, no announcement saying the economy has collapsed. Instead, fuel becomes slightly more expensive. Food prices shift just a little. Businesses start adjusting. And people say things like, things are just tough right now. But beneath that normal language, a system is beginning to crack. Bills take a little longer to pay. Employers delay salaries just by a few days. Small businesses quietly reduce staff. Nothing loud, nothing obvious, but everything is slowly tightening. This is exactly how it felt before the 2008 global financial crisis, before banks collapsed, before markets crashed. It started with something small, people defaulting on home loans. At the time, it didn't seem like a global disaster. It looked like isolated problems, a few families losing homes, a few lenders taking losses. But behind the scenes, those small problems were connected. Banks had taken risks. Systems were over-leveraged. Confidence was built on fragile assumptions. And when one part failed, everything followed. Because economic crises don't announce themselves. They spread quietly until it's too late to stop them. As things get worse, confusion becomes the dominant emotion. You hear different explanations. It's inflation. It's government policy. It's global problems. It will stabilize soon. But none of it feels clear. And the more you listen, the less you understand. People begin to argue. Experts disagree. News contradicts itself. Predictions keep changing. This same confusion existed during the Great Depression. Millions of people lost jobs. Banks failed. Entire industries collapsed. But most people didn't understand why. They didn't see the stock market crash coming. They didn't understand banking systems. They just woke up and everything was gone. Imagine waking up one day and your savings are gone because your bank closed. No warning, no recovery plan, just loss. And worse, no explanation that makes sense. That's what confusion feels like in a crisis. Not knowing what's happening, but knowing something is very wrong. Then comes a deeper fear. Money stops behaving the way it should. Prices rise faster than income. Your salary feels smaller every week. Savings begin to lose value. And slowly, you stop trusting the system. You start asking questions you never asked before. Should I spend now before prices rise again? Is saving even worth it? What if this money becomes useless? During the Zimbabwe hyperinflation, people carried bags of cash just to buy bread. Not because they were rich, but because their money had become almost worthless. Workers were paid in the morning and rushed to spend it before evening, because by night, that same money could lose half its value. A simple meal could cost millions. And the worst part? You could have money and still be poor. This is when an economic crisis becomes real, when effort no longer guarantees survival, when working harder doesn't solve the problem. At this stage, it's no longer about numbers or policies. It becomes personal. People lose jobs, families cut meals, businesses shut down, schools become harder to afford, healthcare becomes a luxury, basic living becomes a struggle. During the Greek debt crisis, people lined up at ATMs only to find withdrawal limits. Imagine needing your own money and not being allowed to take it. People stood in long lines, hoping the machine wouldn't run out of cash. Some cried, some argued, some just stood in silence. That's the moment trust disappears, because the system you relied on can no longer support you. And when trust disappears, fear replaces it. This is something most people don't talk about. Economic crises are not just financial, they are psychological. Anxiety becomes constant, hope becomes fragile, decisions become harder, sleep becomes difficult, planning becomes impossible, the future becomes unclear. You start thinking, will I still have a job next month? Can I afford to eat next week? What happens if things get worse? And slowly, fear replaces confidence. People become more cautious, more defensive, more uncertain. Even relationships change. Stress creates tension. Financial pressure creates conflict. And even people who survive financially carry the mental weight for years. Because once you've experienced instability, you never fully trust stability again. But humans adapt. That's the surprising part. During crises, people don't just collapse, they adjust. They find new ways to survive. They reduce expenses. They find side income. They depend more on community. In the Argentine economic crisis, communities created barter systems. People exchanged goods instead of using money. Markets formed where money wasn't needed. Skills became more valuable than cash. A mechanic could trade repairs for food. A teacher could exchange lessons for supplies. A farmer could trade crops for services. This is what survival looks like. Not comfort, not stability, just adaptation. And sometimes creativity. Economic crises don't affect everyone equally. Some people suffer deeply. Others survive better. Not because they're lucky, but because they are prepared. They diversify income. They reduce dependency on one system. They understand risk. They don't rely on one source of income. They don't assume stability will last forever. This is something history shows again and again. From the Asian financial crisis to modern downturns, those who survive are not always the richest. They are the most adaptable, the most aware, the most prepared for change. Eventually, every crisis ends. Markets stabilize, jobs return, growth resumes. But something never fully recovers. People change. They become more cautious, more aware, more prepared. They save differently. They spend differently. They think differently. Because surviving an economic crisis teaches one powerful lesson. The system you trust can fail. And when it does, the only thing that matters is how well you can adapt. So the real question is not, will there be another economic crisis? Because history already answered that. The real question is, when it happens again, will you understand what's happening? Or will it feel like everything is collapsing without warning? Because for those who have lived through it, they already know the truth. An economic crisis doesn't start with chaos. It starts with something small, something easy to ignore, until it becomes impossible to escape.